Welcome to the Guard Your Savings podcast. Wives often outlive their husbands. In fact, a recent article on CNBC highlighted that nearly 80% of women will become the sole financial decision maker in their household. What's even more surprising, half of all women who become widowed in the United States are under age 59. And since the average life expectancy for women is 79, that means those women will find themselves managing their finances single-handedly for at least 2 decades. If these stats surprise you, like they did me, then this episode is for you. But first, let me introduce our host, Dolph Janis. Dolph is the owner and founder of Clear Income Strategies Group and a trusted insurance professional serving Charlotte, North Carolina. Dolph's mission is simple. You can't live tomorrow until you can live today. So if you're seeking clarity, confidence, and strategies to safeguard your savings, you are in the right place. You can connect with Dolph at guardyoursavings.com or by calling 704-919-0149 to start your journey toward financial peace of mind. Dolph, how are you today?
Well, except for the weather, the darkness at 5 o'clock and you wake up, it's dark. I'm wonderful.
That is an adjustment.
This is the worst time of the year you wake up, it's dark, you go to bed, it's dark.
I know. It's a tough transition for sure. I found myself, don't judge me for it, I put my Christmas lights up already because I needed a little sign of
light.
Joy at nighttime. Well, today we are having a conversation that I think is a wake-up call for women. I have to be surprised that when I read these stats, they caught me off guard. I did not know this, and that recent study sort of shocked me a little bit. So a study conducted by USB found that 85% of women are currently managing the everyday expenses, but when it comes to long-term planning, only 23% are actively involved. So even though women are proactive in day-to-day, they don't necessarily have experience making long-term decisions. And then you read the stat that 80% of women are going to find themselves outliving their husbands. What advice do you have for women who might be avoiding these long-term topics, but clearly we're going to have to face it?
In all due respect, I don't think most of these women in this survey are avoiding the long-term topic. I think a lot of it is the male ego that they want to control and have that power saying, I'm taking care of the family, I'm working, I'm saving for our retirement. I got this taken care of. Don't worry about it. You'll be fine when I pass away. In the 20 plus years I've been working in this industry, when I meet with both the husband and the wife, everything goes so much smoother, 100% smoother because they both understand, they both are on the same page. It just makes things easier when both parties know what's going on 100%. A lot of the times when I just meet with one part of the puzzle, either the husband, most of the time the husband, they're like, oh, I'm the control manager. I'm the one who manages the finance. I'm the one with the spreadsheets and so forth. And the women's are just like, hey, you take care of the day-to-day stuff, I'll take care of the future. So I think a lot of these numbers are a little scrubbed, but they're 100% honest at the same time, because sometimes a lot of the women will just sit back and say, hey, my husband's the breadwinner, he's going to take care of everything, and I'll worry about things later. I'm going to worry about this, that, and the other.
Right.
Well, unfortunately, this, that, and the other comes by a lot faster than you realize. We're coming to the close of 2025 already. And this year has just gone flew by, and then 2026 is going to be the same thing, and the next thing you know it, if you look back over the worst days in this world was 9/11. There's still the one point where I can say I've yet to meet somebody who was alive in 9/11 that didn't know where they were doing at 9/11 at that point. That was 24 years ago. How time flies. My daughter's just is 11 and a half going on 20 right now. It's just, you got to pay attention to what's going to happen in 3 years, 5 years, and 10 years. And a lot of people just don't take that opportunity to say, well, I'm not going to worry about it, or that's a long time from now, because it sneaks up on you. It's like, look at the price of cost of goods these days. Who's taking that into the account of everything? So the intangibles is, I'm not blaming the women at all. I never blame women for anything. Hey, happy marriage, just saying, yes, dear, you're right 100% of the time. You're never going to get in an argument. But get involved in what is there, what are the costs. And that's the thing, is we have a cost sheet that just is a cost analysis sheet. It takes 10 minutes to fill out of what your costs are per month and per year. What are you guys spending? I've yet to meet anybody, my clients in 20 years that filled out the sheet accurately, that they'll say, what are you spending a month? And they'll be like, I'm spending, $4,000 to $5,000 easily, maybe $55 on a bad month. And then they fill out the sheet and they find out they're spending $75,000 to $8,000 a month. They're like, oh, wow. They're always lowballed. And knowing and planning for the future is the only way to get things done, because, more people are afraid of public speaking than they are in running out of money than dying. So, get out there, learn, educate, and plan.
You bring up a great point that there is some of that mentality, I think, where it's, men are the providers in a lot of situations. They're the breadwinners, whether it's because women chose to stay home as a caregiver, things like that. But I love that you, one, don't blame women as a woman. I appreciate that. But two, one of the things that I hear so often is that I think sometimes people don't want to have these hard conversations. Nobody likes to think about their spouse not being part of their picture. Nobody wants, it's easy to put off hard conversations because, let's be honest, it's emotional to think about what life would be like if your significant other wasn't standing beside you. But that shouldn't be a free pass to ignore it, right?
100% agree with you. The hardest answer sometimes to hear is the truth. And sometimes if you went to the doctor and the doctor didn't tell you the truth and he told you what you wanted to hear, how's that going to be in 3-4 years from now when now you're even sicker, you didn't get that lung taken care of, or you didn't get whatever problem there was because, well, he doesn't need to hear this right now. His kid's graduating, his daughter's getting married, his grandma's not doing well, so I'm just going to lay it off on him and let him feel fine with it right now.
Right.
And I'm a firm believer is don't ask me the question unless you want to hear the answer. And in this world that we live in with social media and the news out there, I mean, there's a beginning, a middle, and an end. I say this every episode to every story. The beginning of this podcast to the end of this podcast is a story. And then when we're done, we leave, we do something else. It starts a new beginning. What part are you paying attention to in your life? You start out your life, you live your life, and then unfortunately you pass on at some point. It's the one answer nobody knows what's going to happen is that day you're going to pass away. But we talked about this last episode about the go-go years. I mean, if you're enjoying life and you're living life and you're learning from your partner, and there's a reason you guys said I do to each other, is before I do, and I trust each other, and you guys work together as a team, build that trust, and your kids, yourself are going to be prosperous, but all through life just by making a plan, getting a second opinion. I mean, just because he's with one financial person and she's with another financial person doesn't mean they're both correct. It doesn't mean they're both wrong. But are they working on the same plan together? Or are they working for individual plan going forward? And that is a borderline for failure right there.
Well, you bring up a good point because one of the things that the article said is that most women, after their spouses passed, I think it was 80% of widows, switch financial advisors within a year after losing a spouse. And I wanted to know what you thought, what's the driving factor behind this trend and how can advisors help build that trust and provide the right support? And perhaps maybe you have advice for women too on how they should be, approaching a financial advisor if they suddenly find themselves in the position of being the sole decision maker.
That's a wonderful question. And there will be no answer for that question. It's just personally, who do you feel comfortable working for? 99% of my clients over the last 20 years going into today have two advisors. I work on the safe guarantee side. They work on the aggressive risk side. So are you a risk taker or are you not a risk taker? What portion of your portfolio do you want to protect? That's what we're going to work with here at Clear Income Strategies Group. We're not going to work with any of the funds that you want to put at risk, and that's the difference between advisor A and advisor B. I don't believe in asset management. There's people out there paying 0.5 to 1.5% a fee every year for someone to just put their money in a managed fund and saying, hey, I'm collecting this money, and advisors saying, hey, look how much money you're leaving on the table. It's not life is not about money as much as it is about happiness and peace of mind. And sometimes the wife and the husband passes away, they meet the husband's advisor who's a risk taker and charging tons of fees, so they want to get rid of him, or vice versa. I've helped settle more estates than, I'm not going to use that phrase, over the last several years, and people are like, well, why do you have so much money protected? Because he wanted to leave it to you. He wanted to make sure you guys were taken care of. And that's what the portion that we like to do is it's that G word, that guarantee word. And the wife hears that, hey, how much fees do you charge? I said, we waive our fees. The company's already paying us, so why should we double dip? And they like that. They feel comfortable. And there's a reason people switch advisors is for that one reason. Is the advisor doing what he's doing for a fiduciary for the client, or is he doing it for himself to make more money?
I know that one of the risks that widows in particular face is a significant drop in income, which can put them at an increased risk for poverty. And I was wondering, because your focus is on, that guaranteed income and a more a safer approach, if you would, for having your money, as you said, guaranteed, what strategies are you using to help protect their principal and create reliable income streams when things have changed so drastically?
when you look in this world, it's like how much money you have is important, but it's not the number one factor. Is because when you come into retirement, the biggest thing is people forget is now you're paying yourself. And a lot of advisors get them to the dance. And hopefully they don't dance like Elaine Bennis, because then they're going to crash fall and their retirement's going to go away. But if you dance like the Dancing with the Stars professionals and you go on the right way and you use that analogy of like, okay, how much income do I have? I have several clients I'm working with right now. I have a guy in Fletcher's calling it quits in 3 weeks. Meaning he's retiring in 3 weeks. And it's been a client of mine since 2021. And he came to me in 2021 and said, Dolph, how much money is it going to take for me on December 1st of 2025 to reach $160,000 guaranteed lifetime income for my wife and I as long as we live, not including Social Security? And I gave him a number, and boom, now we've succeeded that number. Now he's actually going to get $171,000 because things performed even better. So as we like to give worst case scenario.
Sure.
So now he knows he has $171,000 joint for him and his wife. They're both 64 years old, and they can retire on that, knowing that. Plus, they can hold off on Social Security because they don't need that right now and use that as a supplemental income. That's the difference between guarantees and promises. Promises never work. I mean, I promise I'll find the killer. I can do this for you. But when you put that guaranteed saying, hey, what is it going to take to secure this amount of money in retirement? That's what we work with. And that's through annuities, through different products out there that offer guaranteed income. There's whole life products out there. Don't work with Index Universal Life. Never met somebody in my life that's Jeff and I as an associate of mine who does that. Wouldn't even offer that to an Ohio State fan because it just does not work. I mean, they had a big lawsuit with that race driver, Kyle something, a famous race driver who lost $8.5 million on something like that. Because again, it was sold by the advisor for the advisor, not for the client. But annuities, pensions, and Social Security are the only three guaranteed lifetime income products out there that someone can get. And Social Security, if you're working, you have that. Pensions they're going away, but some companies still offer that. And annuities, there's more different annuities out there than, God, I can't say that phrase either, than Seinfeld one-liners. Or Kramer time he throws through the door. I mean, it's not there's no such thing as a bad annuity. The only thing is a bad annuity for you. You got to find an independent agent who can offer any annuities out there that can offer you for income, growth, legacy planning, or just pure, simple liquidity. Which one are you looking for? That's what we work with.
What do you say to the people that hear the word annuity and they get scared of the idea of locking their money up, that it somehow won't be available to them?
I love that question because you're not locking your money up for 3 years, 5 years, 7 years, 10 years, or whatever it might be. You're protecting your money for 3 years, 5 years, 7 years, 10 years, whatever it might be. And if you can look at if you put $100,000 in something, and I can tell you in 5 years from now, your worst case scenario is going to be $125,000. It was for the contract minimums and stuff. Okay, I made 5% over the next 5 years. That's fine. But I want $200,000. Well, they can't guarantee that. With an annuity, you're protecting that money because you get the no-fee annuity, guaranteed on them, and they protect your money for that amount of period. That is what annuities are. I mean, variable annuities are worse than someone cheering for Ohio State again. I mean, they have more complaints, they have more issues, more fees, more this, that, and the others out there that they're not guaranteed, they're not insured, they're not protected. The right annuities out there, and then again, it's not locking it up, it's protecting it. It's like, okay, wow, Dolph, 10 years sounds like a lot. I'm 62 years old. I really don't want to wait till 72 to start touching this money. Well, what few people don't understand is they have free withdrawals of 5, 7, or 10% every year of your money that you can take out every money. So let's just say you put in $200,000. I'm going to ask you this question. I'm not going to ask your age, but in your lifetime, what's the biggest check you've written for anything besides a car or a house in your lifetime?
Biggest check I've written? Other than house and car, I can't think of anything huge that I've written. It would be, golly, I can't even think of anything. Really, house and car are my two biggest purchases.
And that's the standard answer I get from 99% of the clients I ask that question for. I'm saying, okay, you're 65 years old, which you're definitely not 65. You're 65 years old. You've been living your whole life. The biggest check you've ever written, you don't even know, there's maybe $7,000, $8,000. And some of them will say, well, I once took a vacation for $15,000. I'll say, okay, so in 65 years, $15,000, and you put $20,000 into, let's say, an annuity, and you have access to $20,000 every year. What makes you think that you're going to need more than $20,000 when you haven't spent more than $15,000 once in your whole lifetime?
That's a great point. But what about the people that here, because I feel like insurance companies, whether, your car insurance, your house insurance, you had that time where you had to make a claim and maybe you didn't get what you thought you should have. And so they hear insurance companies being the ones that are holding these annuities and they get a bad feeling. They get a bad rap. Because what if the insurance company isn't there in 20 years and where does my money go?
Well, they're all insured. They're all guaranteed protected. They have the National Life and Health Guarantee Association. They have the State Protection Act. But I'm glad you brought up car insurance and homeowners insurance and stuff. There's so many protection property out there, P&L properties that you can buy your homeowners insurance or your car insurance for. And there's certain ones that are on TV all the time saying, we can save you this amount of money and stuff like that. Yeah. They don't have an office. They have a call center. And sometimes you're trying to save yourself, let's just say $200 a year on your car insurance for your car. And okay, so you're saving yourself $18.18 a month, but you don't know where this company is located at. You can't physically walk into the building and say it versus a stronger company. You're paying that extra $18 a month, but have that peace of mind when you file a claim, you're getting that check within a week or so, and they give you no problems whatsoever. So sometimes it's great to save money. Don't get me wrong. I'm a coupon cutter myself. It's great to save that money, but at the end of the day, is it worth the headache by saving $15, $20 a month when you could have better service through a higher, stronger A-rated carrier than that extra $15 to $20 a month?
One of the things that you stress and I love about you is that you call yourself an educator first. And so I know that when, circling back to talking about women that suddenly find themselves being the sole financial decision maker, emotional stress and financial trauma can be hand in hand. How do you balance compassion with educating these women that suddenly find themselves in a situation that nobody wants to be in and perhaps they didn't plan for?
I could cite at least 5 or 6 stories from the last 5 or 6 years and couples that were married for more than 40 years and the husband passed away and the woman was on her own. And the number one thing is, hey, it's a part of life. Remember all the good times. Remember all the times you guys shared, the times you guys did this together. Remember jokes and stuff like that. Focus on the best. Don't do your finances. Don't do estate planning. Don't do any financial things when you're not in a good mood, because you're going to make mistakes, because you're going to start dwelling on this and you're going to start remembering bad things. And when you start remember bad things, it's like quicksand. It's just going to keep on getting worse, worse, worse until you're over your head and you're in quicksand. You don't want to ever get in quicksand. You got to look at the positives, like saying, what would Ken do if he was me right now? If he would have done this, what would he would have done? And listen to all those times you guys have those talks and say, well, worry about your income, worry about your kids, worry about your health, and whatever else happens after that, make sure you have that emergency money sitting in the back. Now they have a head on their shoulders. They're thinking about, okay, Ken did this, Ken did that, and now we're all comfortable because of it. I'm going to do the same thing. And sometimes going to an advisor who's 100% risk taker, who everything's in the market and everything's in stocks, bonds, mutual funds, and all that other stuff, is that really where you want to go when you're 75, 76 years old, when you're worrying about running out of money, we're one collapse away from you losing half your portfolio? If you're okay with that, run with it, stick with it, and go with it. But just remember, whatever decision you make going forward, you have to live with it for the rest of your life.
And that's where someone like yourself can come into the picture, because you have that ability to see it from the 30,000-foot view and take the emotion out of it, where somebody who, is recently widowed, they still have that emotional component. But that's why it's so important to have that outside perspective and that outside voice.
You have to. I mean, my Uncle Joe was my last remaining uncle, passed away last weekend. And
so sorry.
And Janet, after one of the first calls she made after she got her head under things was to me. She says, Dolph, we've never worked with you. We've heard good stories. We've known each other since you were born. What do you suggest I do? What do I do now that Joe's gone? He was the breadwinner. He was the one who took care of all the money. I never even knew. He gave me a credit card and said, go spend. And I sent her this checklist of how to deal with a passing and where do I basically, it's called Where Do I Go From Here? And she read it and she went through it and she sent me the most beautiful card. Like about a week later, says, I feel safe. I feel like I now have at least a direction of how to approach things instead of taking risks. I want to have guarantees and at least live the last years on this life happy, remembering all the good times I had with Joe.
Well, if you're listening to this and, maybe it's hitting close to home. Nobody likes to think about what life would be without their significant other, but it's one of those conversations that you're either going to have it with your spouse or after they're gone. And sometimes it's easier knowing that you're on the same page. So if that's you, head on over to guardyoursavings.com. You can schedule a complimentary consultation with Dolph to talk about your specific situation and make sure that you have a plan in place that is tailored to your needs and your goals. Again, that's guardyoursavings.com. WildwoodSavings.com. You can also pick up the phone at 704-919-0149 to get in touch with Clear Income Strategies Group. Dolph, I always appreciate chatting with you and hearing your thoughts on these topics. Even if they're hard ones, they're necessary ones. And so thank you for sharing your wisdom with us.
No, I appreciate you having me. And as I said, sometimes the hardest thing to hear is the truth, and it's a fact of life. So thanks for listening. Listen next week. Send your suggestions of what show you would like of info at CIS for Life, and God bless.
By contacting us, you may be provided with information about insurance products, including annuities offered through Dolph Janis, North Carolina Insurance License number 8483456. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company. Read your contract for restrictions, limitations, or penalties. Dolph Janis is not licensed in all 50 states. To find out if Dolph Janis is licensed in your state, please call 704-919-0149.